This is a simple strategy that appears on any downtrending stock on any given time frame. And if you're able to spot it, you should make yourself some benjis. The setup is a bear flag, and it looks like this. The cleaner the flag, the more touch points it has, and the higher the time frame, the stronger the setup is. I personally like to scalp, so I look for it on the 5-minute time frame. You may be thinking there are so many strategies out there. Why just concentrate on one? Well, I was reading a book called The 48 Laws of Power by Robert Greene, and I thought this law in particular was very fitting. And this law may just be the key to your success as a trader. This is Law 23. Concentrate your forces. Conserve your forces and energies by keeping them concentrated at their strongest point. You gain more by finding a rich mine and mining it deeper than by flitting from one shallow mine to another. Intensity defeats extensity every time. When looking for sources of power to elevate you, find the one key patron, the fat cow who will give you milk for a long time to come. In this case, the rich mine that you should be mining deeper and the fat cow that you should be milking is your one evergreen strategy that has a high probability of working out. It should be the one main strategy that makes you benjis consistently. In this video, I'll go over 2 real examples in our segment 1T, 2T, and then finish the video with my updated list of my trading principles. I wouldn't want to miss it. The idea behind this segment, one trade to take, is that if you take one great trade every day, you can avoid your biggest human weakness, greed. To correct myself, it's the biggest human weakness in trading because the longer you stay in the market and the greedier you get, the more money you tend to lose. You take worse and worse setups and you revenge trade more, trying to make that loss back from the previous trade. And overall, you're scalping way too many trades, giving way too many commissions and fees up, and overall, it's just not a good way to trade. However, using my time-tested strategies, along with my timeless principles, if you stay disciplined and patient enough, the A+ setup will appear. And all you need to do is execute it flawlessly. Let's start with the trade I took today that netted me $870. So let's start with Nvidia. Let me pop up my P&L. I made around $870 from this trade, from the stock ticker Nvidia. So if we take a look at the stock Nvidia, I think, it's pretty self-evident in what you can see, but, for those of you who need a clear explanation, I want to give that to you. So what do we see in the pre-market, right? We see that it's downtrending. It's a bit choppy, but it's downtrending overall in the micro trend. This is a 2-minute chart, by the way. First 4 minutes, what happens, right? Gives us this bullish candle and then a doji candle, meaning buyers and sellers are in control. And mind you, while you're analyzing the stock, what do you need to be doing, right? You also need to be observing what the market, the ES, or the NASDAQ, preferably both. You want to be analyzing the market. I usually look at all of them, so ES, SPY, NASDAQ. And so what is the market doing in conjunction, in tandem with Nvidia, right? The market's it was downtrending in the pre-market, but it popped up, to test this VWAP. And overall, for the next couple minutes, it's chopping, right? And then what does it do? It gives us a huge bearish candle bar, and from there, it gives us this micro downtrend, right? Continuing this pre-market downtrend, right? And so Nvidia gives us a couple bearish candles as well, but then it pulls back, right? You don't want to get in right when it's, giving you that downside, because you never know. You have a supply level right here, you have a demand level right here, and you can't just expect it to break a support level that has been holding for multiple touch points, right? You want to wait and assess the price action. So you don't chase the move on the downside. You wait, you stay patient and disciplined, and then this one actually took a lot of patience because for the next hour or so, it just gave us some chop, right? It wasn't going anywhere. Overall, it was downtrending, but it was pretty choppy. It was just within this range right here. And so finally at around 7:30ish, along with the market, it gives us a nice bearish candle to the downside, right? And once Nvidia broke out of this trend line right here, out of this bear flag, you get in for some puts going short, right? You set your stop loss right here above that candle, or maybe at this level right here, and you let the trade work out, right? So in my case, on this first push down, I get out with the majority of my position, and then it's pulling back. Overall, I shouldn't have gone out. You see, it gives us another nice bear flag. Something that, I should have had more patience for. We all make mistakes. That's why we look back, we screenshot the charts, and we see what we could have done better, right? I could have got one more leg out of this move. So I got out with the remainder of my runners, but still locking in $870. It was a good trade, one that required patience with the opportunity and the setup, right? I had to wait through all this to get the perfect setup, right? So that's why trading is hard, right? People just want to trade all the time, get greedy. They see one move, they see one, candle, two candles going one way or the other, and, decide to go along with that only for it to reverse on them and for them to, get out and give back their money. So, yeah, get in right here at the break of the trend line on the first move down, take your partial position off, and then, adjust your trailing stop loss. Mine was right here, so, when it got hit, I got out. I was expecting it to maybe pull back all the way to this support level and then go down further, and I just didn't want to wait for that, so I got out right here. But you can see that, along this 9 EMA, that's all it pulled back to, and then gave us another leg down in which I should have taken more of my position off right here. And so yeah, picture perfect trade right here with a bear flag in conjunction with the market. If the stock is going along with the market, it's another confidence booster, right? Another area of confluence in which it should give you more confidence to take a trade, right? And so that's what Nvidia. Let's take a look at Tesla. So Tesla was looking real ugly in the first, hour or so as well. More than Nvidia though. Nvidia was, a bit cleaner in price action, right? When the market fell, Nvidia fell. And then with its pullbacks, it became choppy. But Tesla from the gate, from the market open, it was, very choppy from the beginning, right? And so if you're one of those guys who just chases the market open, that's why, you should stick to the end to, take a look at my trading principles. The first one being not to trade the market open, right? Because look at this, right? You would have got shaken out so many times, you would have damn near blew up your account if you tried trading this. So even with this chop, right? Even with this ugly kind of price action, in the end, it still gives us a nice trend line with multiple touch points, right? And so with the ES, right around the time the ES started falling more down along, its EMA and following the downtrend, the overall downtrend that it was going in, Tesla breaks out of this trend line. You can call this a bear flag or a bear wedge, whatever, suits your taste. For me, it gives all the indications of a bearish momentum and bearish pressure. We see a huge wicks right here. We also see some bullish wicks, but overall, the overall micro trend has been downtrending, right, from the pre-market. So go with the trend, make the trend your friend. Don't buck the trend. On this trend line break, you get in right here, set your tight stop loss, maybe above this candle, and yeah, in the 2-minute chart, you can see, kind of slightly pulls back, almost hitting your stop loss. But if you look at the 5-minute, there's no reason for you to get out, right? It didn't close. You need to wait for the 5-minute candle to close for you to, get out of your position. And so you get in on the trend line break, and then on the first leg down, you take some profits. And the next couple legs down, you can see that it kind of chops around here. So you can take, the latter part of your position out and leave a couple runners if you wish to do so. In this case, you would adjust your trailing stop loss, and when it gets hit, opens above it, right? When it opens above it, you get out. And so yeah, that would have been a profitable trade if you follow what I just said to a T. If you execute it flawlessly, you could have made money even in this ranging, a bit choppy of a market on a Friday. It's not, the clean price action that we as traders and scalpers all wish for, but with the right setup and strategy, along with the right plan, it should have been a fairly easy trade to take, given that you already know what to look for and you've practiced it for hours and hours. So this video is going to be short and sweet. Just went over 2 examples, 2 great trades you could have taken, both of which required a lot of patience, maybe an hour or so of just waiting through the chop and seeing, where it's gonna break the bear flag. So yeah, hopefully I explained it in a way that you could understand it. I try to explain it as simply as possible. So now let's move on to the Holy Grail, aka my trading gospel. Now here's my list of trading principles. The first one is no trading the market open. Wait at least 15 minutes. The next one is don't seek action for its own sake. Success comes from extreme patience and decisiveness. I believe I got this from Berkshire, from either Warren Buffett or Charlie Munger. And whether it comes to investing or stock trading, I believe this principle is timeless and universal. You have to be patient, and when the opportunity presents itself to you at any given time frame, whether it's once a year or once a month, that's the time that you should pounce on it and make your decision swiftly. The third one is keep overhead low. Set your risk limit when entering a trade and exit the trade when the stop is hit. Trading is a business, and as with any business, you need to keep your expenses low. Every business has expenses, but the profitable ones that stay consistent over the long term always make sure that their P&L and their EBITDA is growing year after year. It's inevitable, so when you do have these costs, you want to make sure it's as low as possible. The next one is mark important key levels, take note of the macro and micro trends, and analyze the stock's price action, especially at key levels. To mark out your key levels, you start out with the highest time frame, so from the daily or the weekly, go down to the 4-hour, then to the 1-hour. When I say macro trends, that's usually on a higher time frame, so the daily, the weekly, or the 4-hour, and just take note of the overall trend, right? Is it uptrending? Is it going sideways? Is it downtrending? Those are the only 3 ways a trend can go. So take note of that, and then take note of the micro trend. So in the pre-market, what did it do? On the 5-minute, the 1-hour, what is it doing? Price action, another word for market action, is just what you see with the charts, the candle bars, the volume, all your indicators. What is it telling you, right? That's the stock's price action. Next one is look for clean, strong trend lines with multiple touch points, bull or bear flags, and pullback entries in trends. Avoid choppiness. Pretty self-explanatory. These are time-tested strategies that I go over in depth in all of my videos, so make sure to watch them. This one is a bit of a life principle, but the score takes care of itself. Focus on perfecting the craft and executing flawlessly. Second to last is secure your profits after the first leg, anywhere from 50 to 75% of your position size. That way, you're a happy camper by just locking in some gains and letting the trade work out and leaving your runners for longer. Last but not least, set a trailing stop loss after the move goes in your favor to make the trade riskless and profitable. Let your runners ride the trend. This should be anywhere from 25 to 50% of your position size. And that ends the video. Hopefully you understood the content clearly. Please list any of the questions you have down below. And if you learned something, please don't forget to like and subscribe. Make sure to educate yourself with the other videos I posted, as they're all value packed as well. I only try to say things that are time tested, that are pretty universal, and are timeless in their concepts and their principles. And so I personally think there are golden nuggets in every single video. Remember to not focus solely on the money, but focus on who you're becoming in the process. You will gain the income you deserve. I'm wishing you many more Benjis in the near future, and I'll see you in my next video.